Hello, I'm Dr. V. Srinivas, Assistant Professor, Department of Commerce, previous at the College of Arts and Science, Vijayawada. Today's topic or discussion, funds flow statement. At the end of each accounting period, preparation of preparation presentation of financial statements are undertaken with an object of providing as much information as possible for the public. The balance sheet represents a snapshot of financial position at a given point of time. This assets and liabilities and income statement shows a summary of revenues and expenses during accounting period. Though these are very significant statements, especially in terms of principal goals of the enterprise, and there is a need of one more statement which will indicate the changes and movement of funds between two balance sheet dates, which are not clearly mirrored in the balance sheet and income statement. That statement is called funds flow statement. Normally, balance sheet reveals the financial status of the firm only at the end of the year, not at the beginning of the year. It never discloses changes in between value position of the firm at two different periods of time dates. There are many transactions that take place in the business concern which do not reveal by financial statements. Balance sheet does not disclose causes of changes in assets and liabilities between two different points of time. Management, creditors, investors want to determine or evaluate the sources and application of funds employed in the firm for the future course of action. Based on this background, it is essential to analyze the movement of assets, liabilities, funds from operation, capital between these components of 2 years financial 2 year financial statement. The analysis of financial statements help the management by providing additional information in a meaningful manner. Funds flow statement. Thus, another statement has to be prepared to show the changes in assets and liabilities between two balance sheet dates. The statement is called statement of changes in financial position or a funds flow statement. Funds flow statement is a statement which shows the sources from which the funds are obtained and uses to which funds are put. By fund or generally mean working capital. Thus, funds flow statement is a technical device to explain how the working capital position of an enterprise changes for a period of time, generally covering two balance sheet dates. It reveals the amount of the fund generated by the firm internally, along with the amount of funds raised from various external sources and their uses during the year. Funds flow statement is a statement which shows the sources from which funds are obtained and uses to which are put. The term fund generally means working capital. So funds flow statement emphasis on the working capital, how this working capital um, transfer takes place from one asset of equity to another. Importance of funds flow statement, analysis of financial statement. Balance sheet gives the still pictures of financial position as the last date of accounting year. Rational dividend policy by construction of a funds flow statement for the forthcoming year. It is possible to have an idea about the future fund position, guide to the future course of action. The fund required of the firm can be made known in advance for the projected funds flow statement. Proper allocation of resources. The projected funds flow statement enables the firm to make a plan for optimum allocation of funds. Movement of funds in company's balance sheet can be assessed by a comparative statement of different periods of the balance sheet. An investor should compare the values of every section at the reporting date of the current year and the previous year and calculate the changes in their values. Funds flow statement analysis is one of the simplest and basic tool for stock analysis. Funds flow statement analysis help investors in identifying the key areas of utilization of funds for a company during any period, along with the key sources of those funds. Fund flow analysis provides greater help to investors in finding companies which are giving the loans to promoters and related parties, doing significant capital expenditure, investment in subsidiaries, etc. More importantly, funds flow statement analysis helps the investor in identifying from where the company got this money which is it's giving as loans to the promoters, related parties, subsidiaries, etc. An investor can easily find out whether the company is giving away the money which it earned in a profit, or it is taking costly loans from the banks and then forwarding this money to promoters, related parties. The company is taking loans from the banks to give it its promoter, then an investor would note that this company is doing so at the cost of public shareholders. This is because the benefits of this money are being enjoyed by the promoters, whereas it will be the company, including public shareholders, who will have to repay the loans and interest to the banks. Therefore, we believe that simple exercise of fund flow statement analysis can help an investor check the shareholders' friendliness, integrity, and honesty of these promoters' management with a short period of time. It is usually said to know the truth, follow the money. To know the truth, follow the money. Therefore, fund flow analysis is a tool which lets investors follow the money and bring to the light of a lot of hidden aspects of this promoter management decision. This is turn lets the investor know whether his or her interests are being carried by the company or not. This fund flow statement helps is digging hidden information, hidden truth. The term funds has been defined in different ways. In a narrow sense, it refers to money only. In a broad sense, refers money values in whether form any form it may exist, all financial resources. In a popular sense, that means for its chapter point of view, subject point of view, funds means working capital, that is excess of current assets or current liabilities. The term flow means change, and therefore the term flow of funds means change in funds or a change in working capital. The term funds flow statement refers to transfer of economic value from one asset of equity to another. How to identify this flow of funds? No or else. This diagram, if you understand this diagram, you can identify whether this transaction involves a flow of fund or not. No. When both accounts, both for current or a non-current accounts, no. When one current and other is non-current account, then there is a flow of funds. So this small diagram represents when both current accounts are both or non-current account, there is no flow of funds. Is when one current account and other current accounts involved, then there is a flow. That means cross transactions. It is just a significance of a funds flow statement. It highlights the different sources and application uses of funds between two accounting periods. It brings into the light about financial strengths and weaknesses of a concern. It acts as an effective tool to measure the causes of changes in working capital. It helps the management to take corrective actions while deviation between two balance sheet figures. It has instruments used by the investors for effective decisions at the time of their investment proposal. So this statement helps the investors and in the hands of this analyst to identify whether there is any significant change in the balance sheet, two balance sheet dates, which this ordinary balance sheet does not inform to this external shareholders or financial investors or financial institutions. How to prepare this procedure for preparing a funds flow statement. These are three steps in a practical purpose. It's preparing this funds flow statement. First, statement of changes in working capital. Here, all the current assets and current liabilities. With this, how this current assets from one period, a movement of current assets and changes in working capital. This is the step one, finding out this working capital changes. That is the net working capital. Step number two, funds from operations. Here, this is another step to find out. Here, this all non-operating expenses and non-operating expenses are added back to the net profit, and non-operating incomes are deducted. Finally, funds from operations. So the profit shown in the profit and loss account is different. Funds from operation, the statement shows. Here is the logic is all non-cash items should be added back to know the real funds from operation. That is the management philosophy, and management accountants argue that with the financial accounting department, that profit is not the operational true profit, whereas some non-cash items are all included. That's when the funds flow statement is just the adjustment of profit and loss account. With this profit and loss account, some of the non-fund items are added back, non-cash items, and non-operating incomes are deducted. Finally, funds from operation can be arrived. And final step, after preparing this to statement of working capital and funds from operations, the final step is the funds flow state. Preparation of funds flow statement is a statement also called sources and application of funds. This is just rearrangement of balance sheet. So what are certain limitations of this lack of originality? The funds flow statement is prepared by rearrangement the figures already provided in the balance sheet and income statement. Just this funds flow statement is rearrangement of the facts already presented. If this statement in the balance sheet depicts the wrong information, this funds flow statement is not much useful because it rearranges this balance sheet figures and income statement, accounting figures of income statement. It's not much relevant. The funds flow statement is not much relevant for decision making. These are the main limitation. There are various limitations, or these are two limitations. Management accountants focuses on these two limitations.